Hello, friends, and welcome to this episode number one for the series Accounting Made Easy for Homemaker by Dr. Sandeep Chopde. To start with, let's understand definition of financial accounting, which is basics of finance from a household perspective. So let's define what do you mean by financial accounting. Financial accounting is a process of recording, classifying, summarizing of day-to-day transactions of business to know the results thereof. So if you look at this definition, there are three steps involved in financial accounting. That is recording, classifying, summarizing. Now let's understand these three steps by taking a household activities example. So let's assume that our monthly budget for a household activity is rupees 30,000 for a family of two. Now, this is just a representative example to make you understand the definition of financial accounting in a very simple way from household perspective. Let's understand step number one, that is recording. If you want to define recording, recording is recording is keeping the record of day-to-day transactions on some documentary evidence. So if you look at the budget of rupees 30,000 at the start of the month, at the end of the month, you sit and you prepare this statement. Now here I have called this statement as a statement of expenses for the month of December 2022, in which I have made three columns. First is serial number, then particulars, and third is amount. Once you make this statement, you start recording the expenditure incurred for the month one by one. For example, you may have incurred some expenditure for purchasing palak phone numbers, that is rupees 100, methi phone numbers rupees 100, onions 4 kg rupees 200, potato 4 kg rupees 200, chili 500 grams rupees 100, lemon 15 numbers rupees 50, beetroot 1 kg rupees 50, gajar 3 kg rupees 200, and so on. You can add to this further as required. Further, you may start adding the other expenses that are incurred. Moong dal 1 kg rupees 100, tur dal 1 kg rupees 120, rice 2 kg 150, wheat 4 kg rupees 300, jawar 1 kg rupees 70, cashew rupees 500 grams rupees 200, badam rupees 700, cooking oil 3 kg rupees 450, soaps three numbers 150, washing powder 2 kg 250, and you can further add to this list. Still, you can keep on adding the other expenditure that are incurred for the month of December. Electricity bill 1,500, telephone bill 500, gas bill, mobile bill, satellite TV, and so on. To this, I add further some expenses that have incurred on traveling, that is taxi, auto rickshaw, train, metro. So all these expenditure that is incurred on traveling. To this, I add further expenditure incurred on household activities, that is house maintenance 2,500, children's education 2,000 rupees, medical expenses 500 rupees, stationery 300 rupees, newspaper 200 rupees, internet 400, housemaid salary 5,000, and some other expenditure also incurred I add to this. Clothes, cosmetics, that is some shopping expenses, you can add to this further. You may do some entertainment, so you may watch movies, play games. On that, some expenditure incurred of thousand rupees, and so on. So what you have done is at the end of the month, you have prepared this list of expenditure for the month of December. So that is what is nothing but step number one is recording. You have recorded all the expenses incurred one by one on the basis of some documentary evidence. Now, generally, when we go to a sabzi wala, okay, you may not get a bill or any receipt for whatever purchases that you have done. In that case, you may prepare a voucher if required. Otherwise, the documentary evidence required will be, it may be a bill, it may be an invoice, it may be a voucher, and so on. So once you have done recording, that is step number one, okay, one by one, all the expenditure incurred in a detailed way, then you need to do classification. Classification is you arrange all similar transactions under one account. For example, if you look at the expenses that are incurred from serial number 1 to serial number 8, that we can classify as expenses on vegetables. Similarly, if you look at serial number 9 to serial number 18, all these expenses you can classify it as expenses on groceries. If you look at expenses from 19 to serial number 23, this you can classify as expenses on utility bills. From serial number 24 to serial number 27, this you can classify as expenses on traveling. From serial number 28 to serial number 34, this you can classify as expenses on household activities. 35, 36, you can classify it as shopping. 37 to 39, you can classify this as expenses on entertainment. So in classification, what you have done is all similar kind of expenses, you have put it under one account. That is classification. Once classification is done, you can do summarization. Summarization, you can define it as it is preparing a summarized statement. That means what? When you look at the statement at the end, you should come to know, okay, what has happened in the month of December. So what you do is, for all these vegetables purchased, you can make total of it. So when I make total of all the vegetables that I have purchased, okay, it comes to 1,000 rupees. So from serial number 1 to serial number 8, its total is 1,000 rupees. When I do total of all the groceries, okay, it comes to rupees 2,490. When I do total of all the utility bills, that comes to rupees 4,100. That is from serial number 19 to serial number 23. When I do total of all my traveling expenditure, it comes to rupees 2,200. When I do total of all my household expenses, that comes to 10,900. That is from serial number 28 to serial number 34. When I do total of my shopping, it comes to rupees 3,000. And when I do total of my entertainment, it comes to rupees 2,000. You may be having your own vehicle, so on that you may be spending on some fuel that you can classify as classification as fuel. So what at the end of summarization, you will come to know, okay, on vegetables you have spent 1,000 rupees, on groceries 2,490 rupees, utility bills 4,100, traveling 2,200, household expenses 10,900, shopping 3,000, entertainment 2,000, and fuel 4,000. Now you would also like to know, okay, how much have I totally spent? Because I started with rupees 30,000. At the end of the month, okay, how much is my total expenditure? So what you do is you add all the main headings, that is starting with vegetables, you add groceries, utility bills, traveling, household expenses, shopping, and so on. Okay. So you add all these expenditure and that total comes to 29,690. So at the end of the month, I come to know, okay, I started with rupees 30,000, but now my total expenditure is 29,690. So you would like to know, okay, how much you have spent and how much is your savings. So you find out a difference that you started with rupees 30,000, you have spent 29,690. That means you have saved rupees 310. And at the end, you may say that the result of this entire exercise of financial accounting is that you have done saving of 310 rupees for the month of December 2022. That is summarization. So summarization basically is giving you a summarized statement of what has happened in the month of December 2022. And if you look at the last part of day-to-day transactions of household activities in your case, to know the results therefore thereof. So results in your case for the month of December is that you have done saving of rupees 310 for December 2022. That's it. That's it about financial accounting. I hope you like this episode one. If you like this episode, kindly share this episode, like this episode, and do watch my next episode, number 2, on the series Accounting Made Easy for Homemaker. Thank you very much.